far too kind introduction. It's partially because I blame both Amelie and Barbara for this entire journey in a way. We started through discussions through the PSAG and also in some of the May Paris Climate Week events back in 2015 in the run-up to Paris, and thinking through the question of how you actually launch adaptation finance in the private sector and generate some real resilience. So it's great to be back here. I really appreciate and want to recognize IDB ProAdapt and the Nordic Development Funds. This is the second year this has been a supported event. Last year we had this event with couches in Marrakesh, which was also quite fun, as well as Mari-san's participation here and support from the Japanese, as well as for this event this year, which I think is a wonderful additional show of the importance of this factor. I just wanted to sort of start by contextualizing and just saying two things. The first is, I think it's been really important to recognize in the context of the Fijian presidency of the COP that this is not a tomorrow issue and this is not a immaterial issue. This is a substantial and critical and existential issue for a lot of small and developing states, some of the low-income countries. And so even in the context, as we talk about resilience as a business, it's important to mobilize capital, tools, expertise, entrepreneurship to solve this problem and solve it fast, or as fast as we can, particularly because we think in the long term the beneficiaries of this are also going to be those folks in the disadvantaged populations in developing countries. So I want to make sure that that's a very clear understanding of the way that we kind of think through this. The second thing is I just wanted to thank all the people that are here for continuing this conversation and advancing it, particularly the long-standing activities of the Nordic Development Fund and supporting ProAdapt, the conferences, the engagement. I think it still remains one of the leading voices and the first TFI to really be concentrated on the private sector mobilization piece of this and the focus on this as creating a business model. I want to talk to you guys today about just two things. My partner Sanjay Wagley is also here from Lightsmith. We are the two folks that are trying to drive craft from concept into execution. I'll turn my phone off here or throw away some of this. And so happy to have a series of conversations with you about that. We are a new startup private investment vehicle that was launched at the end of last year, just in advance of COP22, to focus exclusively on the climate resilience private sector investment issue. And so that we're all in on this generally. The two initiatives that we've been working on that have been mentioned here are Gari, or Gary, however you want to pronounce it, and CRAFT. Gari is the Global Adaptation and Resilience Investment Working Group. That was a collection of folks, and remains a collection of folks, that folks like 427, people like MUMSS, and others have contributed information and participation to, and that was launched at COP21 at Paris in conjunction with the UN Secretary General's Climate Resilience Initiative, A2R, and is now a formal partner of that initiative. And the main point here was, before the ProAdapt conference as well, we could not find a good place for private investors and private investment perspective to be brought to the issue of the intersection of investment and adaptation and resilience. And so after raising our hands to say that, the Secretary General's office said that we ought to probably do something about that. So we launched this open working group, and it remains an open working group. It's met 10 times in the last 2 years, 5 times in 2016. It released the discussion paper called Bridging the Adaptation Gap, really focusing on the lack of metrics and finding private sector metrics that are out for measuring the problem, as well as listing some of the opportunities we had mapped at that time. We're still far behind where the Japanese have come. We had at that point mapped about 120 companies in the sector. We mapped over 500 now, and we're still orders of magnitude behind where Mitsubishi, UFJ, Morgan Stanley is really kind of discussing that, and I'm sure Mari-san will have a lot to discuss about that too as well. This year's project, to show you where the practicality of this moving to climate action has been focused, is after the 5 meetings we've had this year in Washington, New York, and London, is focused on releasing 2 different objects here at the COP. The first is a draft version of a 5-page investor guide that was asked for by pension funds and others that tries to explain in plain English for private investors that may have no background in climate finance the issue of physical climate risk and resilience as an opportunity as well as risk. So that a draft of that will be posted next week on the garygroup.com website. And you can provide commentary to it, and then a final draft of that will be released at the Paris conference in December. And we'll be then moving to circulate that among different private investors just to get them to understand it. It's a companion piece in a way to the work that the Task Force on Climate-Related Financial Disclosure, which I think Nick and others will have some more discussion about, focused on the physical side of it. So happy that that's continued to be an important focal point, but it shows you that investors are now beginning to really turn to this issue of the physical side of the problem, not just the carbon side of it, in the context of general activity that's been happening in climate risk and disclosure. The second point is about CRAFT, the Climate Resilience and Adaptation Finance and Technology Transfer Facility, which is a mouthful, so we just call it CRAFT. This is a proposed vehicle that was a concept and developed over the last few years. That was one of the 3 winners of the 2016 Climate Global Innovation Lab for Climate Finance competition, about 175 proposals, I think, at the time. And we've worked through over the last 9 months a very rigorous process of evaluating its potential impact, its innovation, as well as its feasibility, and that's been a big part of the discussion as well. And the simple point here, and this is maybe the right chart for you guys to see from there, if you start in the top left-hand corner of the slide, the 3 points about adaptation finance I think are quite well understood by people in this room are: number one, climate change is already underway. It's already creating increased risk and impact. So there are existing risks and impacts that are out there that are being exacerbated by climate change. Most obviously were the hurricanes we saw this summer in the US, but also at the same time about 2,500 people lost their lives in South Asia and Southeast Asia to extreme flooding events. So that's all part of it. The other side of it is to also recognize, in the tiny little picture on the left-hand side here, is of a wind turbine that is not spinning at all. That mitigation and adaptation are related to each other. So even investments in renewable energy are facing increasing performance problems in hydro and wind because of weather volatility that's being exacerbated by climate change. So we need to actually climate-proof our mitigation investments and make sure that they are also resilient. The other example is British Petroleum's West Lake headquarters campus in Houston, which is a LEED-rated, therefore energy-efficient campus, had water over the entry turnstiles after the hurricane and will not reopen until Q1 of next year. So you can have extremely energy-efficient buildings that end up underwater, literally. And so these are things that are interrelated to each other. At the same time, there are a number of solar startups that are right now in Puerto Rico deploying distributed solar generation and storage to actually try to rebuild at least energy supply to that population. 2 other quick things are obviously the adaptation gap that's already been mentioned. It's $300 billion targeted a year by 2030 according to UNEP. And so if you think climate change is already happening, there's a massive gap in finance, as just been detailed again for the second report in a row from CPI. But also the recognition that I think has been one of the real insights that NDF and ProAdapt mentioned here, and also we've been focused on, as well as Mari and others, is that the private sector tools exist to start today. We don't have to wait until lab technology is developed for brand new things we've never heard of before. We don't have to wait for new technology to be developed. We don't have to wait for global comprehensive policy to be established. We can start investing against this and ramping up adaptation finance right now. And that means that there's an opportunity to invest in, scale up, and deploy private sector tools across both developed and developing countries. And the faster we do that, the quicker the scale will be, the lower the cost, and the quicker we can get to a solution. The mapping that we've done that I wanted to allude to here on the right-hand side of the page, and a lot of this is work that was done by Sanjay Wadley and others, but Sanjay on the focusing on the commercialization piece of this, is we've found about 20 different market subsegments, about $130 billion of current spending in the private sector on the risks and impacts that will be exacerbated by climate change. So you would now have to distinguish between those that are real adaptation versus existing spending. But these are things like 2 categories of investments that we described: intelligence solutions, so things that do data and analytics, that provide actionable, localized information that help us map the risk, overcome some of the uncertainty problems with figuring out what the business model might be, as well as solutions companies that actually have physical products and solutions in water efficiency, in agricultural stress, in energy storage, and resilience of the energy grid, to financial volatility and hedging products, as well as healthcare impacts and so on. All the things that we currently use to address bits and pieces of the problem that need to be scaled up and deployed substantially. So just to mention what the vehicle itself is, and we can go into more detail of it, simply put, it's a blended finance strategy, $100 million of concessional finance to mobilize $400 million of non-concessional investment. That's the first innovative component of it. And again, investing both in developed and developing countries with the objective of deploying that technology into developing countries. The second component is a $20 million technology transfer technical systems facility designed after the African Clean Energy and Indian Clean Energy project prep facilities that CPI has also been involved with, really to help transfer that technology into developing countries, particularly being able to reach into lower income and more vulnerable countries. And the third innovation is an attempt for the first time to track 3 to 5 metrics in the investments we're making that will help inform the evolving way of looking at metrics and adaptation and so And so we developed the strategy and put it through the lab process, and we're very happy to have been supported by the lab and its members, which include the IDB and a number of other of the multilateral institutions, as well as many governments, including the Japanese government, in moving forward through that process. And the last thing I wanted to especially recognize, again, as Pasi very kindly noted earlier, today we're happy that the Nordic Development Fund announced support for bringing the concept of craft from its endorsed stage in the lab into execution. We now have financial support as well as mind share and thought leadership from NDF that we'll be working with to take the concept into the execution phase of its development, resource mobilization, and helping to develop further the investment strategy as well as structure. And are extremely pleased to have that and to be part of, I think, a natural, logical follow-on to the ProAdapt strategy in helping to map and understand these things into the financial mobilization of those resources. So I'll stop there.